Hello? Hello?
And setting up corporations. And
yeah, I'm here. Can you hear me?
First 20 or 30 minutes
yeah,
or
I'm
so.
here.
We'll see how the questions go. And then Phil, depending on time, we'll definitely look at those deals. Those are the deals you sent me earlier. Has anything changed there?
My name is Adnan Shabar. I'm a business lawyer, licensed to practice law in Ontario. I've practiced exclusively business and corporate commercial law for the last about 15 years.
Still hear me?
My practice includes both incorporations, organizations, reorganizations, setting up corporate structures, whether for real estate investment or otherwise. And so I can answer any questions related to any legal requirements as it relates to setting up a corporate structure for these sorts of investment purposes.
Okay, thanks for that, Adnan. Sorry about that. I was muted for a second there. Okay, folks, any questions you have about contracts or setting up corporations, just type them in the box and Ed will answer them as they come in, okay? So any questions about setting up corporations, the value of them, why or when we'd use them, and how we'd use them, okay? Not everybody at once. Any questions? Nobody has any questions? I'm shocked. You guys can still hear me, right? I think you can. I see some people typing. Okay, so we're talking about corporations. Wait, they are coming. We're shy. All right, so again, right, setting up the corporate structure, the three-tier setup. Why?
So it looks like, so why would someone keep in under limited company compared to corp? Why would I'm not sure I understand the question. Why would someone keep in under limited company compared to corp? So presumably by corp you mean corporation, and I mean company in law, a company is a corporation. I mean, the terms are used interchangeably. I apologize. I don't understand the question. Why would someone keep in under limited company compared to corp? They're one and the same. I think there may be, if I'm not misreading the question, it just may be a confusion in terms. But a company and a corporation are in law the same thing. Unless Nick in Calgary wants to clarify that question. Benefits of incorporated versus liability company.
You can ask
sorry, Nick, I don't follow. So a company is an incorporated entity.
Specific, obviously, and
so those two terms are interchangeable, right? Whether you're incorporated or a corporation or
at some point it might be wise to seek out.
There's no, in law, there's no distinction between a company and I'm not sure what's next, but a liability company.
To set up something. Okay, so
let me give a group
questions to come in. Okay, why would someone keep in under limited company compared to a corp?
No. So maybe what I'll do is just provide a brief summary, which hopefully will clarify some of this, and if it doesn't, then you can ask a follow-up question. So when the steps are taken to incorporate a company, what you're doing is, the consequence of incorporating that company in law is creating a separate, distinct legal entity, separate and distinct from the incorporator, separate and distinct from yourself, separate and distinct from any of the shareholders, directors, officers, employees, agents, or anybody related to the company. It's its own separate entity. In fact, in law, it is considered a legal person. Okay. Now, in order for people that have any dealings with a company to know that they're dealing with a company as opposed to Sam as an individual, or as opposed to Adnan as an individual, or as opposed to anybody in their individual capacity, the law requires that in the name of the company you include one of 6 endings. And these six endings are either Inc., INC, or the long form incorporated. Those are 2. Or LTD, period, or limited. Those are 4. Or corp, C-O-R-P, period, or corporation. One of those 6 endings. And the purpose for having one of those endings, whether it's Inc. or incorporated, or LTD, or limited, or corp, or corporation, is so that people dealing with this entity, this separate and distinct entity, know that they're not dealing directly with Sam and won't have a cause or a claim against Sam as an individual if things go sideways, and that they're dealing with this separate, distinct legal entity. So I hope that answers that question. Sole proprietorship versus an incorporation. So there are several different ways to operate a business. Several different vehicles through which one can operate a business. Okay. One can operate a business without the use of an intercessor or a corporation or a partnership or a trust or any of these entities. One could just operate a business for their own account, right? So, for example, if I roof houses and I just start roofing houses without incorporating a company or creating a partnership or settling a trust or using any other business vehicle, then I'm acting as a sole proprietorship. That's all sole proprietorship means, is that you're acting for your own account. And there's no separation of identity between you as an individual and you as a business owner. There are certain benefits and disadvantages. The principal benefit, I think, of operating, I guess there are a couple of principal benefits of operating as a sole proprietorship. One, it doesn't cost anything to set up, right? You just start operating the business yourself. There's no separation of identity between you as an individual and the business that you're running. So the cost to set up is nil. There's no cost to set up. the other principal benefit is the ease with which to operate a business through a sole proprietorship. Like I said, you just start operating the business. Incorporation, on the other hand, and I think I went through the process in detail just a couple minutes ago, what you're doing when you're incorporating is you're creating a separate legal person who's operating this business, right? So there are myriad benefits that attach to operating a business through a corporation. One is to insulate your personal assets from liability, right? Because you're not the one who's operating the business, it's the corporation, right? So your assets are insulated from liability as it relates to the business. There are also potentially significant tax advantages to operating a business through a corporation. I'm just looking at these questions as I finish answering one. So Frank here says, and maybe I should go in order here. What is the main difference in the eyes of the lender in terms of percentage lend out requirement? I'll leave that one for you, Haitham. Frank says, can you tell us what is the best corporate structure to reduce tax? So I'd respond to that, I guess, two ways. One, I mean, these tax-related questions, although I'm happy to give you my thoughts on them, are best asked of not just an accountant, but a tax accountant, right? But in terms of this question here, Frank, there is, again, in law, there's no distinction between any of these three types of corporations or any other corporation. There is in law a distinction between, at least let's just talk about Ontario for a second, and this applies for most provinces. There are two types of corporations. There are for-profit, and then there are not-for-profit corporations, right? So whether you're, for example, BlackBerry, that's got, I don't know how many shareholders and what their market cap is and how large they are a company incorporated pursuant to the laws of Ontario. If I had given an example earlier of me operating as a roofer through a sole proprietorship. If I incorporated a company in Ontario to provide roofing services or otherwise, I would have the same exact I would be incorporated under the same exact legislation as BlackBerry was, a corporation incorporated under the corporate laws of Ontario. These terms that you set out here are really just terms of art that are used in certain disciplines. So, for example, just by way of example, Frank, a holding company generally means there's no legal significance attached to this.
So, just want to add, in reference to when you're talking about lenders, and Ed alluded to, and I think he was referencing just terms of the deal and what's the best place to put it under for tax implication. That would be a question you'd want to talk to an accountant in tandem with the other things that you're doing. They might see an opportunity based on your current position to maximize, some tax benefit by moving it over here because you have some other business that can claim the loss or the gain, or that's beyond the scope really of what a lawyer should be advising you, right? And this is where Adnan's going to limit to what he's going to say because he's been trained, he's been schooled, and practiced in law, and that's the extent of what he understands and what he knows and what he does well. So, tax questions, definitely want to talk to your accountant. Setting up the corporate structures, what's best to put where. For tax reasons, that's the accountant. For protection reasons, for asset protection reasons, that's a legal question. Definitely. And the impact of that will be a legal question for sure. So, I hope that clarifies the difference between the two. When dealing with lenders, we can do, the lender can lend the money to the corporation. They can lend it to you, and you lend it to the corporation. I mean, there's so many ways it could be done. Again, for the implication of protection, if you're talking about protection, sure, we can talk legal. But if we're talking about tax, best way to control the tax implication, I'd rather say than reduce the tax implication, just to control the tax, because really it's about, to win the tax game, it's about controlling when and where you pay taxes. When and where you pay taxes, how you maximize that opportunity. You all right, Ed? that you, buddy? Oh, God. Wow. Okay. 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 Okay.
Yeah, why? I don't think so. Anyways, there was another question here from Frank. Let me just take a minute to answer this question. So that's generally so Frank, in respect to the last question that you set out here. So that's generally how the three-tier structure is set up, right? So you've got one company. So think of a pyramid, right? And at the bottom of the pyramid, at either corner, at one corner you've got this real estate company that's sometimes called a real estate holding, sometimes referred to as a real estate holding company, which company does nothing but hold as a passive investment, often land and buildings, right? Real property and law. Then at the other end of the pyramid, at the bottom of the pyramid, at the other corner, you've got the property management company, right? That provides, amongst other services, property management services to the company that holds the real property. Then at the top of the pyramid, you have what you're referring to in your question as a holding company, which company holds shares of the other companies, right? And there's liability issues related to that, and limitation of liability, and protecting assets as well too. That may be, I'll give you a brief summary, but it may be a bit beyond the scope of this call. I don't know what you think, Hyson. But anyways, when you've set up that structure, so you've got one company on top of this pyramid, the holding company that holds shares of the other two company. The companies that are in whose share, the companies that are at the bottom of the pyramid, the property management company, we'll call it, and the real estate holding company, we'll call that company, can declare and pay dividends up to the what we're calling here the holding company.
Yeah, it was. So what I'm showing you there in that picture is the shares exactly what I've said. So we have the consulting company, property management company, that's the active business. The real estate company holding the properties. The dividends are pushed up to the holding company because the holding company owns shares. Is the sole, well, it doesn't have to be, but shares of the consulting and real estate company. The consulting and real estate company are not connected other than in agreement, say, with the consulting company and the real estate company to manage the properties held in the real estate company. Because the dividends get pushed up, and we still pay taxes in both these companies. So the real estate company and the consulting company still required, on proceeds that they make to pay taxes. After those taxes are paid and they're paid out, then monies can move up to the holding company as dividends without a tax implication. Then the holding company can push out those monies to you as an individual, as a shareholder of the holding company, as dividends to you. Now, the impact of that and the amount you should take, and when I should do it and who should be part of it, that's again a tax question. But this is a structure, an example of a structure, again, that you would want to sit down with, a lawyer and an accountant to explain what you have now and what your vision is over the next, 24 to 60 months. This is what I'm doing. This is what I want to do. What's the best thing for my situation? What do I need now? Really is another question to ask, and how they can help you. Does someone do both maintenance and construction? Is it fine to have the activities under one consulting company for a fourth company, or a fourth company has to be formed? Again, that's the question. A question. Good.
So let me answer. I can answer that quickly, right? Yeah. So yeah. I mean, there's to be clear, there's nothing to prevent any individual or any corporate entity, whether it's a human person or a legal person, a corporation. There's nothing to prevent either the human person or the corporate entity from operating as many businesses as they want, right? So from strictly speaking, a legal perspective, there's nothing to prevent a corporation from operating, 10, 20, 30 different businesses. Although there's nothing to prevent you from a legal perspective, there's nothing to prevent you from operating multiple businesses out of the same corporate entity. Sometimes it doesn't make sense from a liability perspective. Maybe by way of an example, I can help explain that. So we have some clients that are, for example, in the automobile industry, right? And what we'll do is for a larger dealership, what we'll do is we'll have one corporate entity that owns the dealership, the new car sales dealership, a separate corporate entity that owns the land from which the dealership operates, and then there'll be a contract between the corporation that operates the dealership and the corporation that owns the land, pursuant to which the dealership leases the land from the land holding company. Excuse me. And then sometimes there may be a third company that either operates the service shop or the body shop or whatever. The obvious question is why and this is not an altogether sophisticated structure, but why this more complicated structure than just one company that operates all businesses, right? Whether it's the new car business, whether it's the land holding business, whether it's the service and auto body business. The reason is if you have three separate legal persons, three separate corporations, one each operating their own business, if any of those businesses suffers a liability event, so for example, let's take as an example, let's say the land holding company is exposed to liability because the land that it owns is exposed to some environmental exposure to environmental liability. If you're operating all the businesses out of that one company that owns the land, then the assets of all of those businesses are exposed to that liability of the environmental contamination. All of the assets of the new car sales business, the assets of the service business and the auto body, and the assets of the land holding business. By separating those businesses into separate corporations, if any of those businesses is exposed to a liability event, whether it's, for example, the land holding business being exposed to an environmental issue or the environmental contamination, or the new car sales business being involved in some sort of, or exposed to some sort of liability event, if you separate the businesses, then that liability issue is contained within that one legal person. None of the other two corporations, or whatever the number is, have any liability for any of the risks associated with a business that they're not operating, right? So if there is this environmental event, then if you have a multiple corporate structure, then the only asset that is exposed to this environmental contamination is the land being held in that one company, right? The new car business and all the assets associated with the new car business are insulated from that liability event because they have no involvement, no ownership, no liability is associated with that event. And similarly, the corporation that operates the service bay and the auto body shop, all of their assets are insulated as well, because they are being operated by this separate, distinct legal person, and they're only responsible for their own operations and activities. Yeah. So just quickly here to respond to Vincent. Yeah. So I mean, I mean, you look at the facts of the situation, right? I mean, you don't separate. Oftentimes, sometimes it doesn't make sense to separate each business activity into a separate corporation, right? Because there are expenses associated with incorporating and maintaining a corporation.
Can you talk a little bit about
Roughly
having
speaking,
existing
becomes
properties
more,
under your name and then transferring
cumbersome with
them
multiple
into a
corporations, having said that, to
corporation,
the
the
extent that
process, a little bit
any one
about that,
business is
and
exposed to,
anything that you can add would be
potentially
great.
exposed to a higher level of risk, then I think it certainly makes sense, and the additional cost associated with incorporating and maintaining a corporation can make ample sense in a situation where there's risk that the exposure to liability from one business can attach to another business. Yeah, so again, this is, I get the question. It's really a tax question, right? I mean, from a legal perspective, there's nothing to prevent you from affecting that transfer, right? From a legal perspective, there's nothing to prevent you from incorporating, if Adnan owned a piece of property today, he could incorporate a company tomorrow and transfer the property from himself as an individual to this new corporation, right? Legal perspective, no issue, straightforward. There are certain potential tax consequences as well. One is land transfer tax, right? Now, that's not as much a concern, I think. It's a good idea to talk to your tax accountant about this, but that's not as much a concern because I believe the Land Transfer Tax Act says that land transfer tax is payable on the consideration paid for the property. Then consideration meaning the amount of money. So there's nothing to prevent you from selling your property to your company for $1, in which case land transfer tax is, it's basically nil. The other tax, however, is potential for capital gains, right? Which is the difference between the acquisition price, the price that you acquired the property, plus any maintenance, well, not maintenance, but any upkeep of the property. The difference between that price and the price that you sell it at. So to the extent that you made money, there may be a requirement to pay taxes. Now, the Income Tax Act, and I'm not a tax expert, but I know that the Income Tax Act allows for certain what accountants call rollover transactions. And a rollover transaction is a transfer transaction. So in this case, the transfer being from of real property, of real estate from you as an individual to your corporation. The Income Tax Act sometimes allows a rollover, a transfer transaction between related parties, you and your corporation, on a tax-free basis. The idea being that the ultimate owner of the property hasn't changed. It's just the legal owner, and that the taxes will eventually be paid because the transferee, the corporation's tax base in that asset will be the transferor's tax base. So just as a quick example, because I use terms that I hadn't explained before. But for example, and I don't know this to be the case, like I said, you'll need to speak to a tax accountant about this. But for example, if I bought a piece of property today for $100,000, and 5 years from now, let's say it's worth $200,000, if I want to transfer it to my corporation, there may be a rollover provided for in the Income Tax Act that would allow me to transfer that property from myself to the corporation on a tax-free basis. The government may be indifferent as it relates to that transfer because the acquisition cost to the corporation of that property would be my acquisition cost, $100,000. So the government's always going to get the full gain on the property when the property is eventually sold to an arm's length third party. I believe there may be a rollover in that situation. I'm not certain. But those are the two tax implications that relate to transferring a property from yourself as an individual to a corporate entity. Land transfer and the potential for capital gains. Now listen, if you haven't owned the property for that long,
that was excellent, Ed. Thank you. Any other questions before we wrap up with that?
Capital gains. And like I said, I'm less concerned, or I'm told by accountants that they're less concerned about land transfer tax because
to limit tax when selling a house, avoid refinancing the house, then getting the money from the bank, and then selling it at almost the price,
the consideration, the amount paid,
money of the refinance. So there is, go ahead,
yields nil land transfer tax.
Excellent.
So, yeah, let me leave that one for you, Haitham. Before I go, I see one other question. I think that's for me. I think Nick is asking, what is the setup cost and the maintenance cost? I think the question's about incorporating. So, the setup cost is approximately, depending on how sophisticated. So when you incorporate a company, there are a couple of steps. One is filing articles of incorporation. One of the most important steps in that first step, filing articles of incorporation, is creating the authorized shares of the company, right? And so your lawyer and your accountant would work together to come up with a share structure that fits you. There is not one size fits all, right? It depends on what your short-term objectives are, long-term objectives, what your personal situation is. Are you married? Do you have children? What's your extended relative situation like? There's a lot of factors that play into what are your plans with this corporation. Are you planning on selling? Are you planning on rolling assets in? So that's step one of the incorporation process, is to file the articles of incorporation to bring the corporation into existence. Step two is what we call organizing the company, what lawyers call organizing the company, and that means creating bylaws for the company to comply with in their operations, elect directors, appoint officers, issue shares, that sort of thing. Now those two steps, and you get, and all of these documents, by the way, all of these steps that I'm talking to you about are required by the governing legislation. The legislation that allows you to incorporate says you have to have these documents. So your lawyer will prepare these documents, and I think, I think an average incorporation price is about $1,500. Okay. You also ask, what is the maintenance cost? I mean, the maintenance is, you're probably talking at anywhere between $150 to $250 a year. There are certain annual resolutions, again, that the governing legislation requires. Oftentimes, when the annual resolutions are prepared, your accountant will also send your lawyer an instruction letter setting out whether any dividends have been declared and paid. To the extent that they have been declared and paid or declared and set aside.
Does that answer your question, Nick? All right.
Then directors' resolutions will have to be passed, authorized.
Ed, if you're okay with it, I'll stop the recording if you want. So, you can post your information if anybody wants to set up corporations with you. Is that okay?
Like that annually per corporation, and then around $1,500 to incorporate and organize.
There's hold on.